Hello everyone, this is Abhijit Chatterjee and Rohan Singh. Welcome to our Charts Are Fun weekly recording on YouTube. This is for the week of October 28th. Today we're recording this on November 2nd. Wow, this was an interesting week where the tech earnings, the big tech earnings came out. In the Magnificent Seven, we had Tesla the previous week, and this week we had five of those seven earnings. It turned out quite a mixed week. A couple of them got good earnings response. All these six companies in the Magnificent Seven beat their EPS, but Tesla was the only one that missed revenue projections. Everyone else beat EPS and revenue. However, from a reaction perspective, you could say 50-50 right now among the six of the Magnificent Seven. The only one that hasn't reported is NVDA. They expected on November 20th, and that's expected to be quite strong, knowing that all these big tech companies, their key customers, whether it's the Microsoft, Google, Meta, um, each and every one of them, Amazon, have announced strong capital spending moving forward. So CapEx being strong means more GPU buying, means NVIDIA's business should be booming. There was one setback with the non-farm payrolls. The typical monthly non-farm payroll comes out the first Friday of every month. So we had November 1st. The news came out way below market expectation. Market is expecting something of the order of 113,000 jobs added for the month of month of October. This was the October payroll report, and we only got 12,000. Well, we know that hurricanes hit us hard, so that could have been one of the reasons, especially the hurricanes in South Florida. And also, we know that we had Boeing strike that also has impacted the job market. So it could be temporary, but you could bet it's going to cause the Federal Reserve to definitely make a rate cut decision. Quite recently, as the September 18th cut came out and the 10-year yield started climbing, it climbed quite a bit over 65 basis points during that period from a low near 3.6, went up to almost 4.3. While that 10-year yield was climbing, there was a time when the CME FedWatch tool that puts out a probability of Fed rate cuts had gone up almost 10% of pause in the November 8th, the November 7th decision next week. Well, it turned out with this job data, market now is almost sanguine, 99%, that we're going to get a 25 basis cut on November 7th. So let's just look at the charts. Let's look at where the market is headed. Today, we're going to talk about overall just market trends, look at volatility indicator VIX. We can look at CPCE, which is the CBOE equity put call ratio. That kind of gives us an indication of the complacency in the market. Put versus call buying. We'll look at some turning points in that in the past. Then look at the Treasury ETF TLT, the long-term Treasury ETF TLT. Look at S&P 500. We had talked about a bearish wedge forming on that, bearish rising wedge. We'll see where that result from that wedge. And then this week, as I said, is a big part of Magnificent Seven earnings. Five of them are announced earnings this week. We'll look at what this charts are telling us. And finally, end with NVIDIA and Sherwin-Williams, two huge additions to Dow Jones Industrial Average. They just got announced after the market closed yesterday on, think about who they replaced. NVIDIA replaced Intel. Intel used to be the behemoth in terms of chip manufacturing, pretty much across the board on PCs, data centers, gaming systems, everything was run and still runs on Intel chips. AMD, of course, is a strong competitor. But the new generation chips, AI, it's all dominated by NVIDIA. By far the king of AI, you could call it, or the godfather of AI, as Dan Ives calls them. So they replaced Intel, and then Dow Chemical, a very old and American classic company, was replaced by Sherwin-Williams, which is a very well-known paint brand, has been around since 1866 out of Cleveland, Ohio. They replaced Dow Chemical. So Sherwin-Williams and NVIDIA, look at their charts to just gauge where they could be headed now that they're added to the Dow, which means many index buyers will start buying their shares. So with that, let's just share the charts. So this is our YouTube site. Charts are fun. We appreciate you subscribing to it and then also hitting the like button after you see our videos, if you like our videos. Our Substack site, chartsarefun.substack.com. We publish daily blogs. There was one that we just published this morning. This is our weekend chart patterns. This one today was about the Magnificent Seven. So some of the charts I'm going to talk about, you're welcome to go take a look at the blog and you'll get to see more details on the technical analysis behind those charts. So talked about where volatility is indicating a very near-term move. I had shared this before, and this is turning out to be quite a possibility. We see a beautiful cup and handle forming on the VIX chart. VIX doesn't necessarily have to follow technical analysis and patterns, but to some extent gives you a trend and give you an idea of where it could be headed. So we can see a cup between 23 to 14.9, which is below 15 up to 23 again. That's the cup. So you could call it a bit of a saucer-shaped cup with a saucer-shaped handle. And then from 23, pull back to 17.99, has since then climbed, hit 23 again. So on Thursday, it hit 23.42. That measured target from 14.9 to 23.14 measures above 31, 31.38. So with an election result on Tuesday night, hopefully we get like early Wednesday morning, we know who the next president is. Maybe we don't. Sometimes if it's a very close contest, the counts could continue. It could be undecided for a few days to weeks. So we'll see what ends up happening, but volatility is primed for a spike higher. It's already been trending higher. We can see that, right? From the earlier part of the year, earlier this summer, we see it was in a range bound between anywhere on the 11.5 to the 21 level, right? From the August 5th, call it the Japanese market carry trade crash, it shot up to 66, 65.7. Very vigorously came back down towards the 14, but now it's on a new trading range. Anywhere from 14.5 to 15 to the 23 level is what we see it trading. So expected a high volatility band, and next week we could perhaps see a spike of VIX. With that, we also look at complacency indicator, which is our CBOE equity put call ratio. More put buying indicates that this ratio climbs higher. Typically, we see it's a multi-year range here. We're talking about a 20-year time frame. It ranges anywhere from the 0.98 was as high as it climbed, but on the low end, it came as low as 0.4. This was an extreme indication in the 2020 like not .com, but the COVID kind of spike. When the COVID sell-off happened, it spiked up towards 0.8, very quickly came down as all the liquidity came around the central banks around the world and to support the markets. And from there, it came all the way to 0.4. It stayed below there because a lot of liquidity was floating around in the market. People were buying stocks like no tomorrow. So it stayed there. A lot of call buying was just put buying. Stayed there for quite some time. And then from 2022, when the cyclical bear market came in, it shot back up. And we know that when October 2022, we hit that market bottom, it shot up closer towards the 0.98 level. Came back down again into 2023. It's been cycling back to 0.8, and now we are towards the low end of that range. 0.54, anywhere from zero point 0.5 to 0.54. We see 2010, 2011, we came close to the 0.5. We came to 0.52 in the 2014, 2020, just before the COVID crash in the market, it came to 0.52. We are now, the last level that we're testing is what happened August of last year or July of last year, around the 0.54 level. This year, we know that it had kind of towards the July timeframe hit closer towards the 0.6. It is now at a lower low. This is the 30-day moving average of that put call ratio. So this indicates that we are at the complacency extreme. Possible if the market shoots up after election results, this perhaps some more downside, the more call buying takes over puts, and this ratio perhaps dips closer towards the 0.5 to 0.5. But we are getting closer to that turning point in the market where we could then see a correction, a decent correction shape up after this thing starts turning and starts climbing again. Something for us to watch. TLT has been an interesting situation. It had kind of, after that 2023 October low, it had hit level near 78 or 79. This is, of course, they do pay monthly dividend, dividend adjusted, but had gone up to 100 recently, close to 101, has pulled back. It is testing an interesting trend line. If you draw the trend line across the declining tops from the early 2024, it's testing that level. This is a possibility that this could turn out to be a support, and we could see a TLT rally coming up, or a TLT snapback, or call it a counter trend move higher. So TLT, which means bond buying could shape up, which means yields could come down, and that could cause TLC some upside. So that's something we're watching. Perhaps a safer bet could be to hedge some of your money into TLT, expecting this climb in the next few weeks, as if the stock market does correct, as we looked at from the put call buying, from the complacency indicator on the equity put call. This could be a hedge for the equities. With that, let's look at S&P 500. I talked about this bearish rising wedge. The wedge is formed by taking the successive rising peaks and the successive rising lows. That kind of converged to a point, to an apex near 5,900. We didn't quite get to 5,900. We got 5,878. Since then, the last 2 to 3 weeks, we have been trending lower. We can see that it broke from that wedge. It has been trending lower, where it's now tested that rising 50-day moving average in blue. 20 is above the 50, which is a bullishly aligned from a moving average perspective. But this was a very bearish candle we got last Thursday, where from the 20, it went all the way down to the 50, rebounded off it on Friday. We got a bit of a rally at 0.41% on S&P, but ended towards where it opened at the bottom of the day's range, which is kind of a bit of bearish. So we could see some selling next week, knowing that election volatility is going to be there. And then we know the Fed decision is there on Thursday as well, which is November 7th. So expect those two to cause stock movements for sure next week, and something for us to watch. Now, I talked about the Magnificent Seven, talked about all the big earnings except NVDA. Tesla started the week before. They beat EPS, missed on revenue, yet the stock shot up. Why? Because their gross margins were outstanding. 200 basis points of gross margin beat. Market was expecting a 15% gross margin. They were north of 17%. Not just that, that's just the pure auto manufacturing gross margin. With the credits, the carbon credits that they get, that's sheer profit for them. That margin was even higher, closer towards the 19%. They expect their gross margins to trend north of 20, which is what they were a couple of years before China sales hit them hard at to reduce prices of their cars. They're expecting to get north of 20 next year. They also expect to see decent volume growth of cars as well next year. So Tesla stock shot up, even though they had missed the revenue estimates. In the rest of the Magnificent Seven, started off with Google. Google came in on Tuesday, beat EPS and revenue. Stock reacted strongly, shot up, gapped up. However, through the day, there was some selling. I'll show you the chart. Didn't quite end or close towards, it maintained its gains for the day for sure, but didn't quite end towards the highs of the day, kind of close towards the lows of the day. Microsoft and Meta came out on Wednesday. Both got hit. Unfortunately, didn't quite meet the market's expectations. They beat EPS and revenue, no question there, but market was expecting even more. Meta in particular had outstanding growth, but what market didn't quite like was the fact of their CapEx spending keeps being very strong. And their CFO, Susan Lee, explicitly said they continue to expect to spend on infrastructure for the next several quarters. And that's part of their business growth. They want to monetize AI. They want to build out a huge penetration of AI into their ad business, into their user engagement. And that is what got market a bit concerned about them meeting their profitability targets. But they were extremely profitable, had both a very strong earnings and a revenue beat. Microsoft turned out to be the Azure business. Market is getting more concerned about them monetizing on their OpenAI. They've got a big investment in OpenAI. They talked big about their Copilot, but the Azure growth rate is beginning to trend lower. From 33% a couple of quarters back to 32 to 31, this steadily coming down. Market didn't quite like that trend when Google's cloud is growing outstandingly well. And so market didn't quite like that and came right after Google. Market expected similar strong growth in their cloud, and seeing a deceleration in cloud, market didn't quite like it. Following day on Thursday, Apple and Amazon came in. Amazon did really well. Their cloud growth is doing quite well, strong growth there. And they met and beat their numbers, both EPS and revenue. Their stock did quite well, gapped higher, and broke above previous highs. Not previous highs as in recent previous highs. It is still a little away from the July high, which Amazon had near closer to 201. It closed near 197. Apple, unfortunately, a lot of expectations from the Apple Intelligence from their iPhone 16 that came out, guided kind of mid single digits. So market expects way more than that. Market was expecting maybe 7 to 10%. They guided about that 5% range. So it didn't dip as much, but kind of did tank. The stock did take a negative hit after earnings. NVIDIA comes out on 20th of November, expected to be extremely strong. Of course, the momentum now having been added to Dow Jones, you're going to see a lot of ETF buying coming in, and that'll help NVIDIA. It already moved up almost $4 on Friday after market close, but you can expect it perhaps to break above its 140 key level, and there's a measured target closer towards 190. We can expect 188, 190 as NVIDIA's next target. We look at that. So let's now look at, there was an article on Barron's talked about XLK, which is really the spider technology ETF. They expect that, expect it not to, just to crumble here. They think that earnings is going to remain strong. Yes, the forward P by E is higher in the XLK than it is for the overall S&P. S&P forward P by E, as they say here, is closer to 21.8. This talked about Meta. Meta is by far the cheapest of the P by E wise on the Magnificent Seven, selling at 23.2. Both Apple and Microsoft are at 33 P by E, with only 7%, mid-single digits, 3 to 5% revenue growth over the last 3 to 4 years. Market doesn't like Apple having a 33 P by E. So there's a possibility that Apple could perhaps lose its P by E, start decelerating because of it not maintaining its growth. And the same thing with Microsoft is not maintaining kind of its growth that the market expects for the P by E closer to 33. Meta is at 23.2. So if any, Meta is valuation-wise at a better placed situation to have further upside, though the concern here is there's aggressive spending and market worries if, and there's also, in the past, Meta's main thing has been their virtual reality didn't quite take off. They continue to invest in it. Their Quest franchise, they want to build out and crack that business at some point. So that's something with our market's concern. But overall, the XLK, this article as published by Barron's, says that the XLK now trades at 28 times forward P by E ratio, so above the 22 that the XLP sells at. But they expect decent growth. They expect tech profits to grow at 18% and sales to grow at 9%. So with that kind of a growth, they expect that the valuation is justified and market could do well. Only thing that's been hitting it now is this recent concerns of election uncertainty. One that's out of the way, Barron's article effectively points to further upside for the tech stock. Let's just now quickly go through the Magnificent Seven stock charts. Start off with the ETF. There's an ETF called by Roundhill called MAGS, MAGS, MAGS for the Magnificent Seven. This is a beautiful cup and handle from 46 to 38.5 back to 46. That measure target is closer to the 53.65. I would have thought that this ever from the breakout would have trended just higher. However, the July high was very close to 50 at 49.96. It came right at that level and pulled back. So it hit resistance at that level. The bears would call this a double top. Two double tops at close to 50, 49.96, 49.98. They would call this to break down from it. Well, to their credit, yes, you can see a much stronger RSI when 49.96 was tested, much weaker RSI at 49.98. So that's a bit of a negative divergence. Same thing with PPO, was much higher at 49.96 test, was PPO now. So these two negative divergences in lower highs in RSI and PPO could indicate maybe it is a double top, and bears would expect it to break below 38, which would be bearish because 38 to 49, that's 11-point drop from 38 back to 27. That could be very, a deep pullback in the Magnificent Seven stocks. That said, the cup and handle on this 46, the one in the July-August timeframe, measures to 53.6. And if you look at a bigger cup and handle from this 49 to 38 to 49, 11 points add to 49, that is to 60. Potentially, this could evolve to be a bigger cup and handle towards the 60 level. And that could either be from a bullish outcome on how the election results come out and with continued strong earnings from the tech sector and Federal Reserve basically helping bring in lowering of interest rates, helping the economy in that sense, and continue for the market to climb higher. So that's a possibility. Is the MAGS ETF breaking once it breaks 50, make a run towards the 60 level for us to watch. That said, near term, yes, both the 50 and the 20-day moving averages are climbing. It is closed right at the 20-day around 47.8. It closed at 48, right above that. The 50 days close at the 46. So if it breaks below 46, it breaks the trend and then starts going lower, then yeah, this bullish aligned 20 above the 50 would change. The 20 could perhaps break below the 50 like it did towards the August timeframe, and that could be bearish if that shapes up. Let's look at the first Magnificent Seven that announced earnings, Tesla. They gapped higher. You can see very strong volume on the gap up. That happened towards the week before when earnings came in. As I said, gross margin was strong. Talked about a very bullish 2025. Market loved it. Took it up to the 272, 273 level, which is resistance. Now, this is a broader up from 271 to 182. That's up almost like a 90-point add up to 273. You're talking about 363, 665. So 365 is where near term Tesla could be headed. From that strong volume move up towards the brim of the cup near 273, the last entire week, all 5 days, it pulled back on declining volume. This is how a handle forms. So if election results are favorable, the FOMC is dovish and market friendly, we could perhaps see a bullish breakout in Tesla towards the 365. Something for us to watch. Tesla chart looks very bullish. Excellent AD. This is the accumulation distribution. Smart money buying into this. The AD hit new or higher highs from the previous part of the year. Higher highs in AD, yes, a bit of a pullback, a shallow pullback on that. PPO is now above the zero line, above the center line, could continue to climb. RSI could continue to climb, and this could turn out to be bullish resolution. Alphabet or Google, they, as I said, opened up, capped up, tested a 183, but didn't quite close towards the highs. It pulled back quite a bit and closed towards the 176 level. During the day, they were selling as a result. So gapped higher, people use that as an opportunity, exit. A big concern on Alphabet has been regulatory concerns. There's been setbacks, the FCC trying to break them up, monopolies kind of claims from both Europe and US regulatory concerns, and that's been one of the setbacks of Alphabet. Stock did start seeing profit taking when it kind of opened closer towards the 183, touched a peak, and then sold out throughout the day and closed towards the lows of the. Still maintained a gap higher from the previous day, but closed towards the low, which meant that there was downward selling. In the next couple of days, Thursday and Friday of this week, it pulled back to close out that gap near 170. That measured target on this cup and handle is towards 192, 193, which is the July high. So it's possible that it came back, took a bit of profit taking, closed out its gap, and continued its climb if we get a bullish resolution of the market after elections, and we could see a Google or Alphabet climb towards the July high in 193. From there, we could see a cup form from 148 to 193. That's roughly, you're talking about 44 points or so, and then break above that potentially. So there could be more upside for Alphabet depending on how it reacts once it reaches 190. Microsoft by far, by the way, these two just to keep in mind, relative to S&P, Alphabet, Google is at 4.3% over the last 7 months. Tesla, if you look at relative to S&P, is very strong at almost over 31%. Microsoft is the worst among the Magnificent Seven relative to S&P. It's down 11% relative to S&P over the last 7 months. We can see that this is a 447 to 384, back to 441. this is being very bullish. If you think that, well, this is a saucer-shaped cup and handle, it maintains its 400 support and breaks higher and moves above the 442 or 443 level, then it could potentially run towards the 498, towards the 500. That's expecting a very bullish outcome, but so far, AD is coming lower, low in AD. That means money distributing out of the stock. Relative performance to S&P is pretty poor, down 11%. RSI is closer towards the 30. What's weaker can get weaker, or what's oversold can be more oversold. I would be cautious on Microsoft, not as bullish until it can, and this is a very heavy volume gap down from that 430 levels to the 400, 406. So we got to watch on Microsoft and see how well it trades after the election results and over the next few weeks. Meta has a bullish cup and handle pattern, 542 to 442. That's 100 point. Add that to 543. Closer to the 645 is its target. Didn't quite get there. Got to 602, 601 twice. Bears would call this a double top, and bears would expect this double top to then break below 560. From this double top, the measured target below 560 is somewhere near, you're talking about 40 points from 561 to 601. Subtract 41 from 561, that's closer to the 521. So bears would expect Meta to break below its 50-day rising 50-day moving average near 555 and go towards the 520 level. However, if this is a nice pullback to test the mid-level of RSI at 50, it can resume its climb, EPO testing its center line and can resume its climb. This could potentially go make a run towards 645. That's the expected target on Meta. We know the fundamentals are strong, and there's a good possibility that Meta could kind of, shape up to have a bullish outcome. It has been a little better than S&P, not a lot, by 2.9% over the last 7 months. So it's not as strong as we see with Tesla and NVDA beating S&P by a huge margin. Amazon, beautiful ascending triangle. Why ascending triangle? Because at the 196 level, we see a close resistance at a horizontal point, tested a few times, and then kind of followed a higher low every time. So that climbing low is the ascending part of the ascending triangle. Measured target is closer to the 240, 239.6. It broke above that 196, closed above it, 197.93, 198. It tested 200, didn't quite test the July high yet at 201, but it seems poised strongly. AD is trending higher. Yesterday's AD didn't quite pan out. You got a dip on it because it closed away from its highs. It opened at 199, tested 200, but closed towards the low of the range near 197. So that's why the AD kind of took a bit of a negative hit with that heavy volume. But that said, chart-wise, bullishly aligned. If this momentum continues, this is headed towards 239. And Apple has a similar kind of ascending triangle pattern, you could call it. The 236, 237 is the resistance line that it tested a few times. Higher lows here as well, 195, 213, 221. It dipped below the 221, tested a 220, but it's still maintaining that trend line. If it breaks higher, that is measured to a target near 279. So Apple got to watch how their iPhone 16 sales comes in on the Christmas quarter and the final quarter of the year. See if it resumes some strength. There's some buying interest, and perhaps if this breaks 237, it could make a run. It's something for us to watch. And finally, NVDA is the Magnificent Seven stock that is yet to announce earnings. Everyone else has. November 20th is the earnings. We know, as I said, strong CapEx projections from all these big tech hyperscalers, which means it's good for NVIDIA's business. And then they got it added to the Dow index, which means there's going to be buying coming in. Already jumped from 135 towards the 138, 39 level on Friday after market close. If this breaks 144, the measured target on this is also a beautiful ascending triangle, somewhere around the 140 to 90. That's roughly, you're talking about 50 points added to the 140 is towards the 190. 188 is its target. That's where we expect NVIDIA to go. Momentum strong, earnings being, if expected to be strong, is strong. They beat numbers. We could expect NVIDIA to head towards that 190 level, something for us to watch. Finally, I talked about not just NVIDIA, Sherwin-Williams, the classic paint company got added into the Dow Jones, replacing Dow Chemical. This has got a beautiful cup and handle, 346 down to 281, up to 355. Measured target is 430. It closed 357. It touched 370 after the Dow news came out. The Dow Jones edition news came out in after hours. It touched 370. If that breaks 392, it's mid-October high. That's moving towards the target near 430. So that's Sherwin-Williams, bullishly aligned, but there's been a recent bearish cross of the 20 below the 50. So you got to watch the trend and see if it's just this kind of index addition helps it resume its climb and starts breaking above 400 is for us to watch. With that, very interesting week next week with election results, with Fed's FOMC decision on. So Tuesday night is election, Thursday afternoon at 2 o'clock is the FOMC decision. A lot of volatility expected. Our summary is, yes, looking back at VIX, a potential spike is expected towards 31, which means it could be a temporary pullback in the market, but could be a buying opportunity, knowing that there's a possibility that we see many of the Max 7 stocks bullishly aligned yet to meet their targets. So there's a possibility that if you do get a transient pullback after the election results, could be a buying opportunity. And just Thursday, you can expect FOMC to step in and help the market revive and have a bullish resolution to the market moving forward. So with that, good luck. Happy trading. Thank you.